Hello, everyone. Once again, this is Black Forest coming to you with another market analysis currency breakdown. We're going to be looking at the Great British Pound USD. But before we get started to break down this chart and this currency pair, we have to state that this video is for educational purposes only. This is not financial advice, but we all know why you guys are here. You guys are here to find good, credible Forex content that can help improve your ability as a trader and help put some extra money in your pocket, especially in these troubling times, okay? So with that being said, we're going to dive right in. Okay, first we're going to discuss what's happening with the British pound and the USD. So the British pound has been really getting beat up since the beginning part of this trading year and since the beginning part of this trading week. We did have some periodic strength pickup in the British pound, but it's really started to push towards that fundamental short period side just due to what's happening with it. And there's several different factors that's causing the British pound to actually be one of our weaker currencies. First factor is the inflation that's hovering over the entire UK. This inflation that's hovering over the entire UK is really putting a stranglehold on its economy. And it's very difficult for the United Kingdom government to make any type of credible interventions to combat the inflation. And this is just due to the uncertainty surrounding the entire European continent's economy as a whole due to the war between Russia and Ukraine. Okay. Now, with the US dollar, the US dollar is coming into this middle part of our trading week technically as one of the stronger currencies. But eventually, we're going to start to see some weakness occur with this, and this is due to a couple different factors. First of all, we had some very poor CPI news come out about the USD that showed that which showed that the inflation is actually staying right there at that 40-year all-time high and is not moving towards the side of shrinking like we would like it to do. And also, we're starting to see a rise in gas prices. If you want more details on how a rise in gas prices negatively affects the USD, I strongly suggest you watch our USD CAD video. We go into great detail with that. But with the inflation the way it is and the rising of the gas prices, we're going to start to see a weakening of the USD. Okay. Now that would make this prime for some type of retracement, but just due to how weak the British pound is at this point, it's going to take some time for this chart to retrace. So there's a strong possibility that we're going to be going towards the short side for another 20, 30 to 40 more pips before we start to see price pick up. So don't be surprised if you start to see price dropping down, then you start to see very aggressive picks up in price. Okay. Now, we don't really have to worry about this aggressive pickup in price being a fundamental price turnover, but we are going to have to look at this as aggressive retracement. But the only thing that can make this chart make it do any type of fundamental turnover is solely if we start to see any type of halt and hostilities or a treaty was to happen between Russia and Ukraine. And from what's happening on the news, that does not look too like it. Okay, so we're going to continue to see a drop in price and eventually see an aggressive pickup towards the upside. We may get as high as here before we start to go back into the fundamental short direction for the long term. Okay. Now, if you guys enjoy our trading content, we ask that you guys please subscribe to our YouTube channel. Subscribe to our YouTube allows you to get up to date